Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complain, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kaini? Maru? Amay?
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja diam tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that the lotus
Doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty,
untouched
touched by what tries to hold it down.
It is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that is the story of this young woman's small tailor shop that has been quietly helping hundreds of women piece their lives together again.
Good morning, everyone. Welcome to the Morning Kappa at 8 on a Wednesday. I'm here to present the Midweek Futures Traders Technical Brief, and we are on week number 1, February 2026. As per our usual, we are displaying here the most popular products traded by traders. And we saw the week before this, it was a tumultuous week whereby we saw a massive sell down on a lot of the products that we follow here. And one category of the products which were hit badly were the metals, of course. And I think it goes without saying that what goes up must come down. And from our side, we noticed that many stop losses were actually triggered due to the fact that markets were too volatile. And I think this is one of those things that we always emphasize, that when you are trading futures, you will need to always look at the risk management side, whereby you need to protect your portfolio with stop losses. And for those who were disciplined in following the principle of risk management, portfolios were protected, and therefore, when markets came back, traders were in the position to take advantage of whatever opportunities that were available then. So I think the message here is when you are trading or even investing in anything, there must be stop losses discipline whereby you have to implement to protect your portfolio. So coming back to the table here, we saw that a couple of the products that we follow here have turned into a negative setup, and mainly to emphasize on metals. From the week 5 in January, coming into week 1 of February, we have seen setups have turned negative. So the general landscape that we notice from here, that market has actually turned more neutral, which means also more cautious. Like I also always been reminding people, that when markets come into neutral positions, it is actually a very good setup, because in a neutral position, markets will have to decide on the next direction, and therefore it is always good to prepare from here onwards, where you would want to take your positions either on the upside or the downside. So for our markets which have actually avoided the sell-off, and have rebounded since, is one that we are looking at is a local product, is our FKLI, whereby the sell down was very minor, and the trend right now is still on the positive. The other one is the Nikkei 225, the soybean oil, and also we noticed that crude oil in particular, right, after a sell down, is turned into neutral very quickly. So that is one of the products that we will focus on this morning. So coming to palm oil, basically the news driving prices has been the seasonal purchasing patterns tied to Ramadan and also the Chinese New Year celebrations. And it is the buyers who are providing these upside values for palm oil. And on the other hand, fundamental side, the reduced output and also the robust January export figures have also provided support for prices. And there is one drawback though: the currency, the ringgit, has appreciated much against the US dollar, and this has kind of constrained price advances a bit. But if we look at the chart here, generally we can see that it is still on a minor uptrend. Therefore, positioning on the buy side will be one of those strategies that would be more implementable in this kind of a trend. So moving on to the commitment of traders for US indices, though we saw a sell down in the indices last week, especially the Nasdaq. What is being observed here is that hedgers have actually been parking their positions more on the short side, increasing 10K of shorts last week before the sell down happened. There is also a bit of movement on the S&P 500 whereby 5K of positions have been added on the short side. For Dow Jones, though, it's a bit on the flat side, so that's a bit more difficult to gauge what traders are doing on that end. But you know, what we have seen basically over the months, the investors in the AI sector have become pickier about AI-related stocks, and basically have been looking for companies generating more measurable returns from their outsized investments in the new technology segment. So also a lot of investors have also noticed that the steeper competition by AI has lowered down margins for quite a lot of companies. So coming to our first segment, which we are focusing on, is the commitment of traders for energies and for crude oil. There has been a reduction of hedging activities, and we saw there was a reduction of 12K long, indicating that there is less what they call direction by traders to actually hedge out their positions in crude oil. Natural gas, on the other hand, have seen a bump up in numbers, rising about 8K in total positions. So we look at crude oil, and we're looking at the micro crude oil for March. Basically, for crude oil, geopolitical tensions remain to dominate the situation, and we saw that the US ships were ordered to the Middle East. And all this if Iran fails to agree to a nuclear deal, and attack on Iran is in the offing. Iran is OPEC's fourth largest producer, and the Strait of Hormuz could be the close-up whereby 20% of the world oil passes. And in fact, last evening, read the news that in fact one of the Iranian drones were shot down by US military, and this has added kind of a bit of tension to the situation in Middle East. So prices are now holding up, and coming to our first market guide for today, it will be crude oil. The current price is at 63.70 on a profile that is positive, as well as a setup that is positive. And so we have got a reference price at 62.3, and the potential profit price we're looking at is at 66, which will give us a value of $370. And if things turns sour and don't go this direction, potential loss price is at 60.5, giving us a value loss at $180. Okay, so the other one that we want to focus on is micro copper. Pardon me on the dates. This should be the 4th of February. So for both the existing profile and also the short-term setup for copper is positive. current price is at 6.03 and reference price at 5.97. And the potential profit price that we are looking at is at 6.13, indicating our view that prices for micro copper will be sustainable, and potential loss price at 5.70 in case of a sell down and things don't go the way that is being forecasted. So potential profit price at 6.13, giving us a value of USD 500, loss price or below 5.70, and giving us a value loss of $675. So that's all for me. I'll pass on to the next speaker. Thank you.
All right. Morning, everyone. Thank you, Vincent, for the midweek futures update. Right. Looking at the Hang Seng Index overall remains bullish, despite that what we do see is that the Tencent has been undergoing a series of corrections. So if you compare the Hang Seng Index versus the Hang Seng Tech Index, tech stocks in Hong Kong market right now is experiencing a very strong selling pressure that led by Tencent. Meanwhile, I think the funds are looking for more cyclical stocks and also commodity related stocks. And so far, the Hang Seng still holding up. Also contribute by two sectors: the insurance companies, the healthcare companies. Right. Also recently, for the past 2 weeks, I also observed that the properties counters start to actually moving upwards. Just that the Hang Seng tech stocks right now is quite weak in the Hong Kong market. As for the leading stocks this morning, right? Firstly, I'll be looking at the Henderson Land stock code number 12. Right. So if the breakout on 32 happens, right, Henderson Land should extend the upside movement towards 33 Hong Kong dollar 50 cents and followed by 35. Downside support is 30 Hong Kong dollar 50 cents. Now, secondly, we do see that the New Oriental Educations 9901 has been going on a very strong upside movement lately. So yesterday night, the New Oriental, which have their shares has also moving upward and break past the 49 Hong Kong dollar. So after breakout, New Oriental will be looking at 53 and followed by 57. Downside support is at 45. So we have pending breakout, Henderson Land and New Oriental, Sin Dong Fang 9901. As for the US market, yesterday, you see the Palantir and SNDK continue to deliver positive returns, but the Magnificent Seven experience a different degree of corrections. Now, worth to pay attention is that NVIDIA have breached the support level and right now is heading on a correction mode. After yesterday, what we read is that Jensen Huang mentions that his investment in the OpenAI is not a commitment, right? So that actually caused confusions in the market whether the big tech company is going to invest in the OpenAI, which right now they are doing a fundraising. And also, market also paying attention to Oracle, which they are going to do some fundraising recently as well to actually pay down their debt. So all these tech company, what we can see is that right now is grappling with high valuations, and meanwhile those fundamental, strong ones are actually looking for fundraising to improve their balance sheets. The other hand, I do see that another sector that worth to actually look at is actually the energy, oil and gas sector. Now, over the years, the oil and gas sectors have not getting their funds, and through the years, they have managed to pare down their gearing. You look at among the sectors, I think the lowest gearing or close to net cash positions, most of the oil and gas companies, right? And as for the US trading stocks, I'll be looking at one robotics company, which is GE Vernova. This is the second time that we mentioned about GE Vernova. We mentioned about these stocks about 3 weeks ago. And right now, the GE Vernova, after the results, the stock is breaking past a 780 resistance. So on the upside, R1 will be 840 and followed by 900, right? And downside support is at 720. And then on, we have one more oil and gas company with Chevron, CVX, also break past at 175 US dollar. So the R1 will be at 185 and followed by 195, and downside support is at 170, right? So we have one robotics company, GE Vernova, GEV, and Chevron, which right now market is looking at their development at the Venezuela. Okay, and as for the FKRI, yesterday we do see that index have a strong rebound thanks to the finance companies, right? And overall technical remains bullish, right? We set our stop loss at 1690, which is the recent low that we see in the month of January. Then on, as for the FCPO, managed to bounce off the 200 days moving average. Uptrend remains intact. Nevertheless, we set our stop loss near 4,000 level. As for Malaysia market, yesterday we do see a very strong selling pressure on Gamuda. We shall see over the week what are the brokers' reports from all the different brokers on Gamuda this week. But I think the what the market right now is discussing whether Gamuda can maintain their earnings prospect for FY26. Gamuda, their year end is on the month of July, right? And first quarter have ended, and right now they have 3 more quarters to go. So I think market is trying to assess what is their FY26. Is it going to be a positive growth, or the growth is going to be a negative year on year, right? So pending on our analyst reports, can actually check on what's his view on Gamuda earnings for the FY26, right? Now for our market yesterday, I think another counter that actually attracted the attention was Pharma Niaga, that went up by 14% yesterday. Okay, and for trading stock this morning, firstly we look at UWC, which climbed above the moving average, pending breakout on 4 ringgit and 40 cents. Break happen, the R1 will be at 4 ringgit 60 and followed by 4 ringgit 80 cents. Downside support is 4 ringgit and 20 cents. Secondly, we have McLean, breaking past the 55 cents resistance, heading towards 60 and followed by 65 cents. Downside support is at 50 cents. So we have two pending. We have one pending breakout, UWC, and one breakout stock, McLean. Okay, I'll stop here and pass on to Sian on the weekly economics update. Rasa, Meng. Thank you.
Thanks, Joseph. So good morning, everyone. Please allow me to share my screen. Okay, I hope you can see my screen now. So basically, as per our last Friday, so Rasa Meng report, so we do see that the global risk appetite has moved lower, but still still in a risk-on mode as indicated by the reading above 1 currently. So as concerns around a potential partial US government shutdown, and also on the back of geopolitical tensions. However, based on today's morning news, actually President Donald Trump has actually signed a 1.2 trillion of spending packages, so ending 4 days US government partial shutdown. So however, we do see that further pullback in the risk appetite could still occur as geopolitical tension actually intensify, especially with currently with US and Iran geopolitical tension. So President Donald Trump has warning Iran of military strikes unless the latter agree on a nuclear deal. So as per last Friday, the oil prices has actually surged to above 69 per barrel, to the highest since December last year, and also stalking the inflation concerns in energy import reliant economies. So meanwhile, in US, last Friday FOMC meeting actually showed that the US FOMC has also held its Fed fund rate unchanged. So voting of 10 for 2 for the decision, which is also in line with ours and also market view. So official rhetoric still adopt an optimistic tone, with Powell do cite that clear improvement in the US outlook, with official dropping languages pointing to increased downside risk to employment. So for this year, we continue to pencil in 2 more rate cuts in 2026. So with the first cut starting as early as June. So in addition, Fed Chair Jerome Powell will vacate his position in May 2026, whereby it is widely expected that Trump will appoint a chair who will push for rate cuts into the year end. So further FFR cuts will also continue to inject the dollar index weakness into the year on the back of a narrowing dollar carry as well. So in tandem with that, so recently we have also revised our own FX forecast for the regional currencies and also ringgit as well. We remain structurally bearish on dollar into this year and expect now the dollar index to fall towards 94 handle by the end of this year versus our previous 97 call. So we are seeing that further Fed easing in our base case, which is 2 more rate cuts in this year, should compress the US real yields and erode the dollar's carry advantage, reinforced by policy uncertainty, twin deficits, and also ongoing investor diversification away from the dollar assets. However, a few risks do worth noting to our projection, so which including a possible hawkish repricing, crowded shorts, and also weak non-US growth as well. So for ringgit, so in tandem with weakening of the dollar, we do see that ringgit to appreciate towards 3.85 by the end of 2026. So given our robust fundamentals and further weakening in dollar. So with the risk of further appreciating towards 3.8 per dollar by the end of this year. That's all from me. I'll stop here and pass the line to Meng Horng. Thank you.
Thank you, Sian. Let me continue with results preview on Coraza technology, integrated technology. So basically, we're keeping our buy call with a change target price of 83 cents. We're giving you 52% potential upsides. Fourth quarter, results, which is slated to be announced on 24th of February, should reflect a stronger year-on-year and Q-on-Q performance, basically supported by high utilization rates as well as the new projects ramping up amidst a semiconductor equipment capex upcycle. I think the stock is greatly oversold over the past 2 weeks, driven by an overreactions to forex concerns, with the strong outlook being disregarded by the market so far. If you look at the semi, they have actually raised their 2026 forecast for the semiconductor equipment sales to reach $145 billion, which is up 9% year-on-year, in which wafer fabrication equipment continues to be the key driver as chip makers step up capex to support AI-related chips, tight memory supply, strong AI accelerator demand, as well as global fabrications builds. I think one, just have to look at, some of the guidance from the global giant. If you look at ASML, they posted record orders and delivered an upbeat 2026 guidance alongside Applied Materials, Lam Research, KLA Corporations. In ATE, automated test equipment, I think Advantest beat expectations and also raised its forecast guidance, pointing to another record year in 2026. Now, back to Coraza, I think over 80% of its revenue is actually tied to the semiconductor supply chain, with about 40 to 50% exposure to this front-end segments, which often carries more stringent requirements. Now, we're looking for Coraza, to have a record-breaking year in 2026, backed by all the bullish guidance from the major wafer fab equipment as well as automated test equipment customers. Its multi-year growth story will be filled by expanding, its total, capacities in plant 3 and plant 5 are now ready. Total addressable market, is growing. If you look at engineering support player as a sub-segment in Malaysia, if you look at all the peers, UWC, UMS, SEM Engineerings are slated, to announce a record high revenue this year. Now, new in-house scan secondary process capabilities are also helping Coraza to penetrate deeper into the front-end customers, as well as potentially new automation project wins in the wafer fab productions. On top of that, I think the aerospace unit is expected to have a much better contribution this year, with more projects going into mass productions. Now, on FX impact, we believe it is a bit of overreactions. While the weak USD is a headline negative for exporters, the impact should be cushioned by strong revenue growth, higher utilization rates across its machining as well as metal sheet productions. These will provide much needed operating leverage to the company. On top of that, I think process improvements on cost down initiatives as well as repricing activities are actually ongoing, especially for the newer projects. Now, about 70 to 80% of its revenue is actually USD denominated, and with a natural hedge from about 55 to 65% of cost of goods sold are also linked to the USD. Now, our sensitivity analysis indicates about 1 to 2.5% impact for every 1% change in the forex rate. Now, just look at the valuations. I think the stock is currently trading at about 30 times FY26P, which is well below its peers, despite a stronger growth on offer. I think if you look at people like UWC is currently trading in excess of 40x, whereas UMS and SEM Engineering are trading in the region of 25x. Now, we maintain our forecast, but we do see potential upsides to our FY26 numbers amidst solid guidance from the major semiconductor customers. Our target price reflects the 20 times FY26P, which is around the 3-year means. Our target price is unchanged at 83 cents. We think, the stock is, undemanding in terms of valuations, as well as the strong growth on offer is above its peers. Now, I think that's all from us. Thank you for listening. We will see you again tomorrow.